Inflation is all the rage. It's all we talk about, day in, day out, almost on an hourly basis. Inflation in Switzerland is much lower than in most other countries. Why do you think that is?
Well, I believe there are a couple of reasons. An important one is that energy has a lower weight in our CPI than in other countries. A second point is that we started at relatively low levels of inflation. And the third one, which is probably the most important one, is that we have a very strong Swiss franc. So the nominal appreciation of the Swiss franc helped us a lot. And we let the Swiss franc appreciate already in 21, so we could absorb some of this inflationary pressure coming from abroad.
But so how do you see the complex of inflation moving going forwards? We see I guess, baseline going down a bit, but core inflation creeping up to 2%. Could this be a problem for the future?
Well, this is exactly, I think, the key point. We have to be very careful. I am assuming that headline inflation will come down everywhere quickly, but we have to focus on the medium to long term, and that means also core inflation. In Switzerland, core inflation is at the moment roughly 2%. We aim at an inflation rate that is consistently below 2% in the medium to long term. Yes. So we do not exclude that we have to tighten monetary policy further.
President, you were one of the first ones actually to hike interest rates, and you've commented in the past that other big central banks should have maybe acted more quickly. Is that still your judgment today?
Well, I think in 21, both fiscal and monetary policy was extremely expansionary, and that pushed inflation down everywhere. We realized already in 21 that there is an increased inflationary pressure. That was the reason why we let the Swiss franc appreciate in nominal term, and that helped us quite a bit. So, and then we started to increase interest rates. Interest rates are still very low in Switzerland. We have only 1%. But as I said before, we do not exclude that we have to tighten further.
But are global central banks behind the curve?
Well, I think every country has to see exactly what is their situation. It's extremely important, in my view, that central banks really commit to price stability, that there is no doubt that central banks will bring inflation down back to 2%, and in our case, below 2%.
Do they need to get there quickly? I mean, you have a small open economy, so of course, if inflation is high somewhere, you get some kind of impact.
Yeah, of course, inflation abroad is a factor that is very relevant for us. So we have to take that into account. When inflation is abroad very high, either we let the Swiss franc appreciate, or we have also inflation in Switzerland. So this is something that we have to understand very well, and of course also to take into account.
I mean, when you look at what you've done in terms of interest rates and inflation, decelerating, do you think we're at the terminal rate?
The terminal rate?
Yes, for interest rates.
Well, actually, I do not really like this term, terminal rate. We go from quarter to quarter, we make a new analysis, a new forecast, and then we see whether we have to tighten further, whether we leave it where it is, or whether the situation changed completely and we have to lower rates again. So I think this discussion about where is the terminal rate, etc., is not that, I think, positive. We have to look from quarter to quarter and see what is the right adjustment.
So let's not call it terminal rate, but where do you think we end up in interest rates? Yeah. What kind of ideal scenario do you see from now?
Well, we have a forward-looking approach, but we hate to use forward guidance in a very precise way. So, of course, what we said very clearly is that how we see the world today is that we cannot exclude to tighten further, and then we are roughly at 1% now, and inflation is still above 2%. So it's clear that some tightening is not. It's probably in the cards.
So maybe one further tightening, and then you stay at that level. Would that be the right way to see it? To also make sure that actually the second round effects, that everything plays out before you analyze again.
Well, we will see exactly, but the second round effects are really important. So we had this big push of energy prices, but in the meantime, inflation is much broader. It's everywhere in services, in rents, etc., etc. So we cannot avoid these second round effects, but we have to make sure that they do not dominate at the end the inflationary process. And we also realized that the inflation dynamics changed quite substantially. Firms for a very long time, they never changed their sales prices, but they were also not ready to accept higher purchase prices. And in the meantime, that changed completely. So everybody is accepting higher prices, but they would also like to increase their sales prices.
But it's clear that the markets and actually economists believe you'll hike in March and then stay on hold for the rest of the year.
Yeah. Well, the markets have to figure out exactly what we are doing. We go from quarter to quarter, we make an analysis. And of course, inflation is lower in Switzerland than elsewhere. So that also means that the increase in nominal interest rates are probably lower than elsewhere. But we will really make sure that inflation stays below 2% at the medium to long term.
When do you see a potential for a rate cut?
Well, we have to see inflation that is very different from today. The rate cut is surely something that is not discussed yet. We will. It's rather the opposite, that you have to tighten monetary policy further, because the inflationary pressure is still here. It's still even increasing a little bit. So it's not the time really to discussing about loosening monetary policy.
So I guess it's only when core inflation. I mean, could you explain? Again, your thinking is it's only when core inflation will go down in a significant trend that would be something that you'd think about?
Well, if you look at our published inflation forecast, this is an unconditional forecast, a conditional forecast. So it means it's valid under unchanged monetary policy. And if you go at the long horizon of this forecast, if this is really clearly below 2% and stable there, I think this is a signal that monetary policy is more or less at the right place.
President, do you worry about the rate differential between the SNB, the ECB and the Fed?
Regarding interest rates, well, I think every country has to look at its own monetary policy, what is appropriate. For us, it's very important that inflation is combated also abroad. We suffered a little bit from these very big inflation differentials, because they have a big impact then on the real exchange rate and where nominal exchange rate should go. So this is something that we have to take into account. And but I have no doubts that inflation will go down also elsewhere abroad, so that this inflation differential will become smaller again in the future.
The franc has also touched below parity. How much of a concern is that?
Well, we should not only look at the nominal exchange rate. It's also, I think we have to take these inflation differentials into account. That means we have also to look at the real exchange rate. So below parity is today something completely different than a couple of years ago. And we stopped telling that the Swiss franc is at an elevated level, it's highly valued. We do not comment anymore really on the day-to-day volatility of the Swiss franc, but of course the exchange rate remains extremely important for us. So if the Swiss franc becomes too strong again, we do not hesitate again to be active on the foreign exchange market.
What would too strong be?
Well, if the exchange rate would have an impact on the inflation rate in such a way that we go really close to zero or even into negative territories.
And this is something that you're monitoring for the moment, or do you think it's something that could actually happen?
No, at the moment inflation is clearly above 2%. Core inflation is at 2%. So it's not something that is really at this current exchange rate situation a problem.
President, what are the markets getting most wrong, you think, at the moment?
I think the markets are having a relatively clear judgment about the economic situation. I think the uncertainty is very big. So it's for us difficult. It's also difficult for the markets. If you look now at the business cycle, we expect that growth will be relatively low, at least for this year, not only in Switzerland, but also in Europe and US. That can change quickly, so the markets could be wrong, we could be wrong, etc. So we have to observe that very quickly. The uncertainty, in my view, is higher than normal, and of course that makes it more difficult than to have a precise forecast.